What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we had FOMC and the bulls were able to hold critical support, but the bears are still showing up at resistance. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY was down 0.64% and we continue to see the market going absolutely nowhere. Going back through November, we are still trading sideways even though we're getting plenty of volatility intraday. Rejections of note were the resistance below the negatively sloping 200 daily moving average and that bear market resistance trend line, which is now right around 406. But we also did see the bulls holding the support of that rising 20 daily moving average right around 399. So I continue to tell you this is a trading range between 393 and 408 until we get the breakout above 408 for the bull breakout or below 393 for the bear breakdown. Everything in between is going to continue to be a volatile chop fest until we break out of this consolidation and continue some type of trend. Below 393, the bears take back control for the gap fill at 381, and above 408, the bulls take control for the gap fill right around 420. So continue to be patient and trade the range or just wait for the breakout. But either way, just remember this is going to continue to be a volatile market while we're in this sideways consolidation. We're definitely getting plenty of volume, so we should see the breakout soon. The market may be waiting for the OPEX coming this Friday, and then possibly we'll get the breakout next week. But just be prepared and know both scenarios and then plan accordingly once we get the breakdown or the breakout. On the Nasdaq 100 triple Qs, we were down 0.74%, and again we are still stuck in this trading range between 280 and 293, and intraday we did get rejected from resistance and hold up above support. So again, this is still a chop fest while we go absolutely nowhere, going sideways, going all the way back through November. So the market is still in this consolidation sideways movement until we get the breakout. The triple Qs need the bull breakout at 293 to go to the price target at 308, or the bear breakdown below 280 to get to the price target at 268, and we will have a resistance and support in the middle right around 288 and the support right around 286. So trade the range or wait for the breakout and just continue to be patient. On the Dow Jones, we were down 0.47%, and we see the Dow Jones finding resistance around 342 but still holding above the support at 337. The bears need that breakdown below 337 to go fill the gap at 331, and the bulls want that breakout above 347 to get to the next price target higher at 353. Now also keep in mind we are still above a rising 20 daily moving average while we're above 340, so that is also a great support level for you bulls. On the Russell 2000 IWM ETF, we were down 0.66%, and we still have this valid double top from the resistance right around 188 while we're below this neckline at 182 with the valid downside price target at 176. So this is critical resistance at 182 because below 182 we could still be trying to go lower to 176, so do keep that in mind. The bull breakout will be above 182 and 184, which is going to require daily closes above those levels. Otherwise, we are still looking for this double top to play out. On the ARKK ETF, we were down 1.02%, and ARKK still has price action below all of the moving averages. So if we do lose this support at 34, it should be a very quick flush down to 32.5. And below that, we'll be looking for 31.3 and $30. The critical resistance remains 36.5 and 38, and you can't get bullish until we break above that resistance. On the VIX, we were down 6.26%, so we're definitely seeing fear leaving the market while we see the VIX getting crushed, and the VIX is back down below all of the moving averages, so we could be seeing the VIX trying to come back down towards 20. Keep in mind the bears continue to step in this bear market while the VIX is lower, so be cautious as the VIX approaches 20, we could be nearing very critical resistance. If we start getting consecutive closes below 20, that's more bull market behavior, but we won't know it's coming until we see it in the price action. On Bitcoin, we're currently up 0.18%, and Bitcoin is trying to hold that bull breakout above 17,550, but is just getting way too outside the upper Bollinger Bands, which are still squeezing and still contracted. As long as we can hold the breakout at 17,550, the upside price target remains 19,000, so you can stay bullish as long as we're above that critical support. On Amazon, we were down 0.98%, and Amazon is still closing below a negatively sloping 20 daily moving average, so it could be possible we're getting ready for the next leg lower down towards 86. but you can get a lot more bullish if we start getting daily closes above 94 and 97. If we break below 86, look for the next leg lower at 77. On Microsoft stock, we were up 0.12%, and Microsoft printed a perfect doji candle today, trying to ride that upper Bollinger Band towards the gap close at 265, but continues to find resistance at the negatively sloping 200 daily moving average. Critical support remains 255 and 252, because if we break below that support, we could be coming all the way back down to 242. On Nvidia stock, we were down 2.2% as Nvidia is holding the third day in a row back above the 200 daily moving average, and we did close the gap down here right around 175. So Nvidia is looking more and more bullish the longer it continues to close above 175, so do keep that in mind. The bull trend is building up and the price action is back above all the moving averages, so the bull trend is going to continue to strengthen the longer Nvidia can hold above this breakout. The upside resistance remains 179 and 192, with the critical downside support at 166 and 156. On Tesla stock, we were down 2.58% today, and we did hit the price target around 155, which could be temporary support on the way to the price target at 138. Keep in mind, this is a valid double top rejection from 197 while we're below 167. So even if we get a bounce from 155, we will be looking for a lower high rejection and continue down towards our price target at 138. We can get a lot more bullish if we can get back over 173 and this 20 daily moving average at 179, but we won't get any confirmation of a bull breakout until we see price action above that resistance, so continue to expect lower prices. On Apple stock, we were down 1.55% with another rejection from that critical resistance around the resistance at 146, and we could see the bears trying to fill the gap down here at 138 and 133. The bulls will need to get back over 146 and then back over 150, so this is still a downtrend in Apple stock while the price action is below 146. The financials were down 1.25% today, getting rejected from that resistance and trying to fill the gap at 34.35. The industrials were down 0.19%, with the price action still above all of the moving averages and still holding on to the bull trend. The healthcare sector was up 0.16%, with price action still above all of the moving averages and still in a very strong bull trend. The energy sector was down 0.61%, getting rejected from the 50 EMA and coming back down above a rising 5 EMA, so you can stay bullish as long as we're above 84, but instantly need to get risk off if we lose that support, because we're very likely coming down to $80. So jumping back over to the S&P 500, this is still a market stuck in sideways consolidation that has gone absolutely nowhere since November, so continue to trade the trading range between support and resistance until we get the breakout. The breakdown below support will confirm we're continuing into the bear market, and the breakout above resistance will tell us that we still have more to go in this bull rally. Anything in between is going to continue to be a volatile chop fest, so try not to get eaten up in the choppy volatility. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You could learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining us at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Trading Discord community by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.